Efe Omoduemeke, fund manager at Stanbic IBTC Asset Management, joins me now to look at the market ahead of the opening bell. Thank you so much, Efe, for joining us. Now, we saw a reversal yesterday where stocks, many of them falling back into positive territory. Now, let's start with what the key drivers for today's trade could be, and if we could see the market continuing this bullish run, as it were, from yesterday.
Okay. I think basically the first point would be to look at why we experience such negative turns in the market this week. I think basically the main driver for the market this quarter was supposed to be half-year results from companies and probably good corporate actions, but this was kind of short of expectations based on the result that has come into the market so far. And then, as expected, investors basically will start taking a bit of profit. But I think that the market has received quite some beating, and it should reverse like what we saw yesterday. I expect that going into the market today, it should be fairly flat or moving towards the positive direction. And this is basically because most of the securities are currently trading at some significant discount to prices that investors perceive to be their intrinsic value. So, for example, the likes of First Bank that you mentioned should rally a bit, because I think the fair value of First Bank should be somewhere around, say, 25 thereabout, and it's currently trading at somewhere far below that, and investors should pick them up at this time. GT Bank, the same thing, basically because of the attractive dividend that they've proposed for the likes of flour mills and the other companies in the consumer space. We expect that investors would take this as a good entry point, and I expect the market basically to move up today or a couple of weeks' time.
Speaking about First Bank, obviously that's one outstanding bank that hasn't released its second quarter results. Any hope of that coming onto the market today?
Basically, First Bank is usually one of the last to release their result, and this is expected. I don't really think it might come in today, but I expect it to be out in the market in, say, next week.
Now, what could be investors' perhaps trading behavior strategy for today and going into the new week, now that we saw a slight reversal yesterday?
Okay, basically, in terms of investment, really, I think that the first question should be, what are the possible entry points for some of the securities? Like as I alluded to earlier, most of the securities have reached their reasonable entry price. So the likes of the names that I mentioned have really touched those points that you think that you could get at least a 15%, 20% appreciation. So I think that the strategy going forward will be less of trying to guess the market, trying to guess where the market trend will be, trying to guess what this company's price will drop to or what it will appreciate to. Rather, it will be more of, is this price good enough for me to come in? Is this price good enough even if the market drops further? Is this price sustainable enough for me to come in and reap some attractive returns, which I think is positive, and I expect that investors will start coming into the market now to pick these securities at these attractive prices.
Okay, let's move a bit away from the market. Let's talk about the power sector now. Some of these companies that, of course, have taken over the assets from the PHCN. Way before now, there have been several calls for them to list on the exchange. Well, we've heard the SEC, we've heard authorities or the NSE saying that at some point they're hoping that some of these power companies would come to list. For you, what would be a good point for them to come to the market?
I think the good point as a market participant is now. It will help broaden the number of securities that we have in the market. But to look at it from the company's own perspective, I think they might be willing to, or they might be thinking of waiting a little further to experience more stability in the market, just to protect probably their prices. But from the perspective of an investor and a market player, I believe that time should be now.
Okay, how much of a turnaround could we see when they eventually, or if they eventually come to the market?
I think it's going to really affect the market positively. I think because as it is, the number of securities that investors can really participate in are quite few. There's a Dangote Cement that controls over 25% of the index. with these companies coming in, it will help dilute the weighting of Dangote Cement. It will help broaden the asset classes or the sector classes in the market, and it will really help diversify the investment base of the market.
Okay, finally, let's talk about the consumer goods sector. We saw that index coming up yesterday along with the financial services sector. Now, for you, what stocks do you think still hold a lot of value, especially now that many of them have recorded losses in the last 2 weeks?
First security I'll pick will be Flour Mills, followed by UACN. Flour Mills because last quarter we saw Flour Mills trading at above 100 naira. And we expected that it will rally for about, say, 2 weeks or thereabout, picking up an additional, say, 10 to 15%, taking it to, say, 115 or 120. But the reverse was the case. We saw a market slow down. We saw selling interest or selling pressure in the market, and that pushed the price further down. Last week, I think or early this week, it dropped to about 65 thereabout, and we expect it to move closer to that 100 naira mark. I think currently it's about 76. Between 76 and 100, I think that's close to 40% appreciation. So I think investors will be looking in that light, looking that the company is also willing to grow its revenue base and then try to pick it up to make significant appreciation going forward. So I will pick Flour Mills first and then the UACN second.
Okay, now when the company released its first quarter results, although we saw a slight drop in the top line, I think, but the rest of the numbers were quite good and they actually beat analysts' forecasts. Were you one of those analysts that reviewed their forecast for the company's earnings going forward?
No, we were not. We really do not review our own forecast or expectations based on first quarter results and things like that. What we do basically is to ask ourselves that this trend, would it be sustainable? For Flour Mill, I think yes, it will be sustainable. We would wait a bit to see more strong performance from the company, more convincing performance from the activities of the management of the company before we would decide to review our forecast. Reviewing the forecast upward means you are putting a more strong buy to what you currently have. And since it's a buy generally is a buy, and we think that it's good enough at the price it is.
Well, thank you so much, Efe, for sharing your thoughts with us. Efe Omoduemeke, fund manager, Stanbic IBTC fund managers, talking us through the market ahead of the opening bell. Well, that's a wrap on Open Exchange West Africa for today. After the